Hi Team Value, JJ here, welcome back. Well, the 13F filings are out by super investors for the first quarter of 2024. I'm doing a series looking at their portfolios, what they've been buying, and today we're going to look at Brian Bears Capital Management, who's been specializing for 24 years in small cap and mid cap. So we'll see what they've been buying and selling. Really experienced, had a good record. This is the Bears Capital Management website. It's got their investment philosophy on here in summary. We'll take a quick look at this. If we go down here, we can see the three basics, which is reminiscent. It reminds me of Acre Capital Management. Sustainable competitive advantages they're looking for. Who isn't? Talented and trustworthy management teams and substantial and underappreciated growth potential. So Acre Capital Management has looked for those things as well and got a museum of growth companies over time, multi-baggers, and I think that that's what they're looking for. Our goal is to distill our investment universe down to what we believe are the most extraordinary businesses. Ultimately, our research effort is intended to identify future extreme winners they're talking about. So big growth over the long term, sustained growth, the next generation of leading public companies before their potential is realized in the marketplace. So they want to get these growth businesses early. That's a lofty goal there, but it's exactly what I'm interested in, finding these small caps that have a long runway for growth. That's why I was attracted to this. I wanted to see their portfolio and see what's in it and see how they're doing it. They've been doing it for a long time, and so we'll have a look. This is the podcast that prompted my episode today. It's Value After Hours. I was listening to it this morning, and it's Brian Bears talking about moats, analytical edges, and the importance of growth. So he goes through his investing philosophy. Now, this is the Bears Capital Management portfolio here. There's quite a few stocks in here, about 30 stocks in here, some that are not widely known, which is interesting to me. I'm interested in small caps, as you know, mid caps, and that makes up the majority of their portfolio here. And today I'm going to focus on what they've been buying recently, just in this last quarter, because the 13F filings are out. They've reported, and we can see here that they have bought a few in this quarter. Interactive Brokers, they added 10.39%. Align Technology, they added 44.43%. These are mid-cap stocks. I believe that was probably getting towards the large cap. And Viva Systems, 100%, so that's a new stock. They added to Franklin Covey Co. They added to Astronics Corp, 10.3%. Zeroa Inc., they added 41.4% to. Going down the list, Sound Thinking Inc., they added 4.9% to. I'm not aware of that company. It'll be interesting to see that. Iradimed Corp, 0.72%, so just adding to that a little bit. Wide Open West, 20.48%, so adding to that significantly. And ThreadUp, I've heard of that, 11.37%. Couldn't dig into the whole portfolio, but I will be doing that in private, going through this list and seeing if there's anything interesting. I might talk about it more on the Patreon. I'll leave a link in the description if you want to check out the Patreon. I go way more in depth, talk about things that I don't talk publicly there, things that I don't share anywhere else, including the small caps, and I'd be interested to talk about some of these picks here. Once I've had a chance to go through it, let's go through it and just have a quick look at these companies and why this fund might have bought them. Okay, this is Franklin Covey, which they've bought a little bit of in that first quarter. This one's only a $498 million company, and they bought $18 million worth of this company, which is less than 1% of their fund. And we can see if we go to all here, it's 11.4% CAGR over the time, and over 10 years, 6.1, 5 years, 4.4. Let's have a look what's been happening recently. It's gone down. So it's gone down 9% year to date over the past year, down a little bit. So maybe they're taking the chance of, the price going down a bit to snap this up. What does the company do? I have no idea. Let's have a look. Franklin Covey provides training and consulting services in the area of execution, sales performance, productivity, customer loyalty, leadership, and educational improvement for organizations and individuals worldwide. The company operates through 3 segments: direct office, international licensees, and education practice. So let's have a look at some of the metrics on this to see why they might be interested in this. It's definitely in the small cap realm, less than $1 billion. Gross margin is 76, operating margin 9, and the returns on capital here Not too bad. The return on capital employed is 27.3, which is pretty interesting. It's definitely interesting. Very little debt. The PE ratio is 30 and the forward PE is 17. You can see why they might be interested in this company, buying a little bit of this company now. It's got some pretty good metrics and it's a small cap right in their wheelhouse. I think I'd like to dig into this company a little bit more myself. Having seen this now, this looks pretty interesting to dig into further because it's under $1 billion. They've said they like companies with a long runway for growth, good management. They send out analysts. He was talking in that interview how they have analysts. I think he said about 10 or more analysts where they send them on the road. They visit the companies, they talk to the management teams, actually go to the companies and suss it out, hopefully really well. So this is a good starting point for me to dig in and see what the fuss is about, why they like this company, to find out, to reverse engineer why they might be liking this company. Now, if you're getting value out of this episode so far, I'd really appreciate it if you manage to hit that like button to spread it to more people. It really does help. And if you haven't already, you might consider subscribing as well. And next, another small cap. This is less than $1 billion again, $741 million market cap. But this one goes back to 2005 at least. Overall, it's had 9% CAGR, but maybe it's had a better run over the shorter term. 10 years it's actually down, negative CAGR. 5 years is negative CAGR. 3 years it's 9.1. 1 year, so it's picking up. This 25.6% rise in the last year, and it's having a good year this year. So they obviously like the where this is heading. They had kind of a big rise there. 2015 that was. And what does this company do? Astronics Corporation. Let's investigate. Astronics Corporation, through its subsidiaries, designs and manufactures products for the aerospace, defense, and electronics industries in the US, North America, Asia, Europe, and quite a few other places. Internationally, it operates in two segments, aerospace and test systems. Let's have a look at some of the metrics to see why they might be interested in this. Just superficially, this is a really quick look, just to have a quick look at these and see if they're worth digging into. I wouldn't invest based on just 30 seconds of looking at these, but it's a good place to start to see if we want to dig into. And I've already found one that I might want to do that. And, under $1 billion is definitely something that interests me for a start in terms of small caps. And we see here that this is not looking super hot. So I'd be interested in why they invested in this and what's going on under the hood. Just by looking at the metrics here, you can't tell if they think there's a long runway for growth and this is a quality company. Can't necessarily tell. Gross margin 17. They might be having just 1 year of not so great metrics here, and it could be improving. They might see something here that we're not looking at. So nothing jumps out there on those metrics as being super great. So I would be wanting to kind of, look at the earnings call and look at the financial results and see what's going on there, and more about what the company does to see why they might be interested in this in the first quarter of this year. What's going on in the company that interests them. They obviously think the management's good or they wouldn't have invested in it. But what's good about the future of this company that they can see. Next is Zora, which is a small cap, and they added 40% to in the first quarter. It's $1.5 billion market cap, so a little bit bigger. Enterprise value of 1.4, and overall it's had a negative CAGR, but let's have a look over the last 5 years. Negative again. 3 years negative. Okay, so just in this past year, it's up 19%. Year to date, nearly 17%. So really over the lifetime, and it goes back to 2018 here. It's had a sort of a downtrending. So they obviously think that perhaps this is going to change over time, or they wouldn't have invested in it. Zora provides cloud-based software on a subscription basis that enables companies in various industries to launch, manage, and transform into a subscription business. Okay, there we go. So a lot of companies going from that, buying software to a subscription model, even, non-software businesses. A lot of businesses are wanting to go to subscription model because that's recurring revenue over time. So maybe they think there's a runway for this to help businesses do that. And if we go to some of the metrics here quickly, just a quick browse of what's going on here, we can see that their gross margin is 66%, negative operating margin. There's a lot of negative numbers there. Maybe, they're changing the business. I don't have to dig in and see. The 4P ratio is 25, PEG ratio 2.61. So nothing really jumps out there at this point. I wonder what they're interested in this business. This is one you'd have to dig into more and see what's going on in the business, but it is in the ballpark of 1.5 billion small cap. Next, we have this company Sound Thinking, which is definitely in the small cap range, only $185 million market cap. And it's got a timeline there going back to 2017, so not a brand new company. It's only got a 1.3% CAGR over that time. Over the past 5 years, negative, 3 years negative, 1 year and year to date, all negative. So I wonder what the interest them about this company. What does it do? Sound Thinking, a public safety technology company that provides transformative solutions and strategic advisory services for law enforcement and civil leadership. Its Safety Smart platform, an integrated suite of data-driven tools that enable law enforcement and community violence prevention and health organizations to be efficient in public safety outcomes. It offers a Shot Spotter, an acoustic gunshot detection system, Crime Tracer, a law enforcement search engine, Case Builder, an investigation management system, and Resource Router, software that directs patrol and community anti-violence resources to help maximize their impact. Well, that was quite long, but I wanted to read that out. It was pretty, it got more and more interesting. So let's have a look at the metrics there, because the CAGR hasn't been so great, not up and to the right, even, over the long term. So I wonder why they're interested in this company. Perhaps something's changed recently on this small company. Let's just have a look at the recent metrics. Gross margin 57, so that's pretty good. So a lot of the negative numbers there as well. So in these smaller companies, it does pay, to dive in to see what's really going on here, especially when there are negative numbers there. 4P ratio is 37, which is pretty high. And we can see that it's really going down there. GuruFocus here kind of says, be careful, it's a value trap. So the fund obviously thinks that this is pretty good value if they're adding to this. Presumably they think it's way undervalued, so it'll be interesting to see what's going on. You can't tell from just looking quickly at the metrics like this, but if you listen to an earnings call, the last earnings call, we might find out what's going on. I find that a good way to find out, in depth. You can hear the executives' voices, find out what's going on. If there's something on the horizon that's good or something that's bad, you can tell in that sort of 30-minute to an hour earnings call what's going on. If they do have an earnings call, a lot of small companies don't have, so it's a lot harder. Not a lot of analysis. So I'd want to hunt around and see if anybody's written anything about it as a starter, and then dive into the financials as well and what they're saying about the company. And next we have this company IRadimed, which is definitely small cap again, $500 million, $554 million market cap. Let's have a look and see how this has been going over time. 15.5% CAGR, that's pretty good. And that goes back to 2014, so that's a pretty good record over that time. But up and down roller coaster ride as you'd expect with a small cap. And over 5 years, it's had 16.3. So this is pretty good, compound annual growth rate. 3 years at 16. So pretty consistent, even with the up and downs along the way. Down for the year, so not having a great year, but over the long term, really good. What does this company do? It manufactures, markets, and distributes magnetic resonance imaging, MRI, compatible medical devices and related accessories and services in the United States and internationally, where we can see the need for that. It offers Meridian MRI compatible intravenous infusion pump system and associated disposable IV tube tests. Okay, so definitely medical devices there, medical equipment, which is definitely a growth area over time. We can see some spikes it had here in 2022, and then it went down a lot. And I wonder if they bought more there. I'd say so if they're interested, and they think this has got a long runway for growth. And looking at these quick metrics here, this looks pretty good just on the face of it. Gross margin 76, over 76. Operating margin 30, which is pretty juicy. And net margin 26. These all look good. Return on capital employed 27.45. So, and these returns on capital all looking good. This is a company that it looks promising just on the face of it like this. I'd be wanting to dig into this. It's got really good metrics. It's, small cap. So there's one that I'd be interested in. If we look at the P ratio, it's 31, which is not low, but these metrics imply that you'd be okay with a high P ratio. Forward P is 28. And again, that return on capital employed is 27. And the ROE is 25. And the growth, we look at the growth here, pretty good growth. So this one I think is pretty interesting, and I'd want to dig into this one a little bit more. Okay, the next small cap, which is 401 million, which is again in that small cap realm. It's just called Wide Open West. Wow is the ticker. Pretty interesting name. Wonder what it does. We'll find out. So over the long term, it's actually hit a negative 17.1% CAGR. Let's have a look over the last 5 years. Negative again, 3 years negative, so not a great run there. Let's have a look overall. You can see the big spike it had there in 2021 and it's gone down, but generally the trend being down there. So I wonder why they're interested in this company. What does it do? Wide Open West provides high-speed data, cable television, and digital telephony services to residential and business services customers in the United States. Its video services include basic cable services. Okay, cable company, not a growing business, but if it has other services, if it provides high-speed data and telephony, that's more interesting. Cable, to my mind, is a bit of a dying business. Streaming's where it's at. Definitely the streaming companies. So I'm sure it does more than us. Maybe cable's not its main thing. I don't know. Why would they be interested in this? It's having a long runway for growth. Let's have a look at some of the metrics here, what's going on there. I notice the enterprise value is 1.3 billion there, so definitely carrying some debt there. Pretty high debt, don't like that. And so gross margin is 57, not too bad, but a lot of these negative numbers here. Price to sales is 0.58. I don't know, I'm not sure I like the look of that. Again, you'd have to dig way into the hood here and see what's going on, because just looking at it from quickly like this, it would be easy to dismiss that, saying you'd want to keep away from it. But maybe there's something about it. If they think it's good management and long runway for growth, maybe something's happened with the business and things are getting better. But they probably don't necessarily like turnarounds either. So I think you'd have to read a lot more about this company to see what's going on. But compared to the last one, not looking so good just on the face of it. Okay, now we have ThreadUp, which is a small cap, $228 million company. Small. I do know about this one. I have looked at this before, and I know that Chuck Akra did buy this for a time and then sold out of it a while ago. Definitely had a rough ride since the IPO there. And as many have that IPO'd back then, and 1 year it's down 28%, even year to date it's down 8%, but they have picked up some stock here, so I think they still like the future of it. And if you don't know what it does, it operates online resale platforms that allows consumers to buy and sell secondhand women's and kids apparel, shoes, and accessories. The company was founded in 2009 and based in Oakland, California, so it's existed for quite a while, but it's had its troubles, but they think this is interesting. In terms of allocation, it's pretty small. So the metrics here on this one, we can see that it hasn't got a huge amount of debt, which is good. Gross margin 67, which is pretty good. There's a lot of red there, a lot of negative numbers though in the returns on capital, and the PS ratio is just 0.68. But yeah, definitely some negative numbers there. Some we'd have to be careful of this one. I think it does say it's a value trap thing twice, but they obviously like it. So far, it's a low allocation, but it'll be interesting to see how this goes and how this develops and find out more about the company as well. But there are a few in there that I think are much more interesting than others, which I mentioned along the way that I'd be wanting to dig into. And it's good to look at, say, 10 like this and then just pick one or two to dive into. And I think that I saw some with pretty good metrics there that I want to dig into that look pretty healthy and interesting in the small cap range. Now, I'd love to know what you think. Did any of those grab your eye that you'd be wanting to dig into more? Do you own any of them already? Let me know in the comments. I'd love to know what is of most interest to you. Now, if you're watching this episode on YouTube, I'm going to leave 2 links here to previous episodes, recent episodes about small caps. One with Warren Buffett talking about small caps, how he'd be investing in small caps if he was starting again, and one about super investors, recent small cap buys as well. So go and see either of those. If you haven't seen those already, I'll put them in the description for those watching or listening elsewhere. And thanks to everybody for watching or listening, and I'll see you in the next one.